Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called False Breakout Hedge. This is a pure price action strategy. No moving averages, no oscillators, just candles, daily pivot levels, and a clever recovery mechanic. By the end of this video, you'll understand how it spots a breakout, how it confirms when that breakout turns out to be false, and how it manages both sides of a trade together as a basket. Let's dive in and explore how it all fits together. So what exactly does False Breakout Hedge do? At its heart, this expert advisor is built entirely around price action. It uses no moving averages, no relative strength index, no average true range, and no bands of any kind. Instead, it leans on two of the oldest tools in a discretionary trader's kit: floor pivot levels and the engulfing candle pattern. Every trading day, the strategy folds the previous calendar day's high, low, and close into a set of classic floor pivots. The central pivot point, resistance 1 and 2, and support 1 and 2. These levels stay fixed for the entire day and never repaint, which means the EA is always anchored to the same reference points that many intraday desks watch. From there, the approach is a breakout system with a twist. When price pushes through resistance 1 or support 1 with a strong engulfing candle, the EA reads that as a momentum break and opens a position in the direction of the move, aiming to scalp toward the next pivot. But pivots are also where false breaks are manufactured. Stops get swept just past the level, and price snaps back. This is where the strategy's signature mechanic comes in. If a later candle closes back through the level it just broke, the breakout is treated as false, and the EA deploys an opposite recovery position, the hedge, to ride the snapback the other way. This style of strategy is generally aimed at liquid, range-then trend instruments such as major currency pairs, gold, or an index contract, on intraday timeframes like the 5, 15, or 30-minute charts. It's best suited to traders who want to study how breakout and reversal logic can be combined and managed systematically. Remember, this is educational information only and not financial advice. Let's break down the mechanics step by step. The first job every day is building the pivots. As each bar closes, the EA tracks the running high, low, and close of the current calendar day. When the day rolls over, that completed day's high, low, and close are turned into the pivot levels for the new day. The central pivot is the average of high, low, and close. Resistance 1 is 2 times the pivot minus the low, and support 1 is 2 times the pivot minus the high. Resistance 2 and support 2 extend a full day's range above and below the pivot. The size of that range matters, because every distance in the strategy is measured as a fraction of it, so the logic adapts to any symbol or time frame rather than relying on fixed pip values. Now the entries. The EA only looks for a new trade when it is completely flat. For a long, it waits for a bullish engulfing candle, one whose body fully swallows the previous bearish candle, that opens at or below resistance 1 and then closes decisively above it. Decisively means the close clears the level by a set fraction of the day's range, filtering out weak pokes. The mirror image applies for a short, a bearish engulfing candle that opens at or above support 1 and closes clearly below it. There's also a conviction filter, requiring the signal candle's body to be at least 55% of its own range, and a spread check, so the EA skips entries when the spread is too wide. When a trade opens, the stop loss is placed a structural pad beyond the far side of the engulfing candle, and the take profit scalps toward the next pivot. Resistance 2 for a long, support 2 for a short, capped to a scalp-sized fraction of the range. Then comes the hedge. While that single position is open, if a later candle closes back through the broken level by a defined fraction of the range, the breakout is declared false, and the EA opens an opposite position, larger by a hedge multiplier, to ride the reversal. Now both directions are held. From that point, basket management takes over. The moment the combined floating profit reaches the basket target, everything is closed and banked. If the combined loss hits the basket cap instead, the EA flattens everything to control the downside. Trading always involves risk, and losses are part of the process. Let's look at the actual MetaTrader 5 code driving this. At the top, we have the input parameters, the dials you can adjust before running the EA. Min body frac sets how much of the signal candle must be solid body. BreakFrac defines how far beyond the pivot price must close to count as a real break. TP frac controls the scalp take profit distance, while stop buffer frac sets the stop padding. FailFrac is the threshold that confirms a false break, and HedgeMult scales the recovery position. Basket TP money and basket SL money govern when the whole basket is closed in profit or loss. Max spread points filters wide spreads, and lots and magic set the base volume and the identifier. Now the long block. The condition broker 1 checks that the candle opened at or below resistance 1 and closed above it by the break pad. When that's true and a bullish engulfing has formed, the EA computes a stop loss just below the candle's low, sets a take profit scalping toward resistance 2, and calls trade.buy to open the position. The short block is the exact mirror. Broke S1 checks that the candle opened at or above support 1 and closed below it by the break pad. When that lines up with a bearish engulfing, the stop goes just above the candle's high. The take profit scalps down towards support 2, and trade.sell opens the position. Notice both sides use the same scalp dist helper to cap the target to a fraction of the day's range, and both place their stop a structural buffer beyond the engulfing candle. It's a clean, symmetrical design, the same idea applied long and short. This walkthrough is purely to explain how the code reads, not a recommendation to trade. Let's bring this to life on the chart. On screen, you can see a candlestick sequence with the day's fixed pivot levels drawn across it. Near the top sits resistance 2 at 1.0885. Below it, the pivot are 1 at 1.0865. Then the daily pivot at 1.0850, support 1 at 1.0835, and support 2 at 1.0815. These horizontal lines are the backbone of everything the strategy does. Remember, they were calculated from yesterday's high, low, and close, and they stay fixed all day. Watch the opening candles. Price is hovering around the daily pivot, drifting gently higher and pressing up toward resistance 1. Notice the small candle that stalls just under that level, a modest bearish candle that can't push through. On its own, that tells us very little. But the very next candle is the one the strategy is waiting for. It opens at or below resistance 1 and then closes strongly above it, and its body completely engulfs the previous candle. That is a bullish engulfing breakout, and you can see the buy entry marker appear right there. The strategy has read decisive momentum through the level. Resistance has failed upward, so it opens along and looks to scalp toward the next pivot. From the buy entry, follow the candles climbing. Each one builds on the last, pushing up through clear air between resistance 1 and resistance 2. The take profit target sits at the next pivot above, resistance 2 at 1.0885. As price reaches up into that zone, the take profit marker fires and the long position is closed. That's the clean version of the trade, a strong break, a run to the next pivot, and an exit at the scalp target. Now the market turns. After tagging resistance 2, price rolls over and begins to fall. It slides back through the daily pivot and heads down towards support 1 at 1.0835. Just as before, watch the candle that probes the level. A small bullish candle nudges into support, but momentum is shifting. The next candle opens at or above support 1 and closes firmly below it, and its body engulfs the prior candle. A textbook bearish engulfing breakout. The sell entry marker appears here. Support has failed downward, so the strategy opens a short and aims to scalp toward the next pivot below. Trace the move down from the sell entry. Candle after candle drips lower, working through the space between support 1 and support 2. The take profit target is support 2 at 1.0815, and as price slides into that level, the take profit marker fires and the short is banked. Two trades, mirror images of each other, each anchored to the same fixed pivots. Now, here's the part that gives the strategy its name, even though our chart shows the clean outcome. Imagine that after the buy entry, instead of running to resistance 2, price had snapped straight back and closed below resistance 1 again. That close back through the level, by a set fraction of the day's range, is what the EA treats as a confirmed false break. At that moment, it would deploy the opposite recovery hedge, a larger sell position, to ride the snapback, and then manage both legs together as a basket, closing everything once the combined floating profit reached its target. or flattening if the combined loss hit the cap. So on this chart, you're seeing the breakouts that worked, but the hedge is always standing by for the ones that don't. That blend of riding clean breaks and recovering from false ones is the whole idea. And as always, this is for educational purposes only. And that brings us to the end of our look at the False Breakout Hedge Expert Advisor. We covered how it builds fixed daily floor pivots, how it enters on engulfing candle breakouts through resistance 1 and support 1, how it places its stops and scalp targets, and how its signature recovery hedge and basket management respond when a breakout proves false. Hopefully, you now have a clearer picture of how breakout and reversal logic can be combined into a single systematic approach. Everything here is educational content only, and not financial advice, a recommendation, or a solicitation to trade. If you found it useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and drop a comment with the strategy you'd like me to break down next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.